All right, looks like everyone is in, so we can start now. Welcome to another Twitter space organized by MarginX. I'm Jamie, who's the host of this podcast, and I'm also a crypto influencer myself on both English and Cantonese content. Today's topic is all about trading, as we have a lot of degen traders here on this podcast. Well, me myself, I'm definitely learning more towards the long-term investment side of things. But I do swing trading a little bit, but just not as frequent. I'm sure a lot of listeners are just like me, who wants to get in, but at the same time wants to know more about it first. So joining us today are some degen traders in the field to share with us their trading experience and trading journey, and also some tips for all of you traders out there. So the first guest that I would like to bring on is Andre. He is a full-time trader for years now. So Andre, why don't you unmute your microphone right now and give us a little bit of background, who you are, how did you get into crypto trading, etc.
Hello, everybody. Once again, Andre McClendon. I started my journey when it comes to investing when I was in the Air Force back in 2007. When I first joined, I progressed through the markets from stocks to commodities, futures, and then Forex. But Forex brought me on to crypto. And since I've gotten to that space, I believe around 2012 or 2013, around there, I fell in love with crypto, fell in love with Forex, and those are my two primary markets. I used to, when I first started trading, I was a losing trader. I lost a lot of money because of inconsistencies, basically horrible checklists, and basically failure to take action on trade. So I got into automated trading from there, from about 2016, 2017, and from then till today, I just got into automated trading.
Right. It's great to have you. I mean, you lose money and that's how we learn, right? So the next guest speaker that I would like to bring on is Raymond. Raymond is a DeFi expert, and I believe he trades a lot of altcoins as well. So Raymond, why don't you give us a little bit of background and how did you get into crypto?
Yeah, sure. Thank you very much for having me, Jamie. So, so just quickly about myself. So my name is Raymond, aka Gentleman Zhao. So previously I came from a TradFi background. I have 10 years experience working in investment banking in Hong Kong. So previously I was primarily cover the TMT companies, like aka internet companies out of Hong Kong. So it has been quite a journey for the last 10 years. So that's why I always get in touch with tech, maybe Bitcoin stuff from very beginning. I've been buying Bitcoin since 2017, 18-ish in the previous cycle, but that was a long time ago. And now I have been doing full-time trading since the beginning of last year. So it has been almost 2 years. So as Jim mentioned, I trade a lot of altcoins. So the altcoins I defined are primarily liquid venture investments. So it's basically a venture capital investment into a protocol that is very new, and providing some very cutting edge technology, and potentially can generate outsized returns, which is usually a form of venture capital investment, but somehow we can execute that in crypto world through liquid token. So it combines both the VC investment as well as the secondary market trading techniques. So this is actually very interesting, two things combined. So that's why I'm very fascinated by the liquid token, liquid venture investment. I have been doing crypto for quite some time, but I only recently started writing about my alpha ideas. So if you like, you can follow my Twitter. I occasionally post my alpha ideas on my Twitter. Yeah, and at the end of this year, so basically starting Q4, me and my friend, we start a new fund, crypto fund. So where I'm actually actively manage a crypto hedge fund focused on liquid tokens. So yeah, so that's pretty much about me.
Thank you, Raymond. You sound like so professional indeed, and I'm sure our listeners would love to follow you for some alpha ideas. And well, last but not least, we also have Peng, and he's also a Degen trader for altcoins. Well, we are all Degens here, right? So, Peng, why don't you unmute your mic and tell a little bit of your background? How did you get into trading crypto?
Yeah, hi everyone. Yeah, my name is Peng. In my day job, I work at FunctionX, which is a layer 1 blockchain built with the Cosmos SDK. But for fun, I do a lot of trading. I'm not as degen as before. I lost a lot of money from FTX and Terra, so that curbed my risk appetite by a bit. But yeah, I've been trading since so I discovered crypto in 2020 and have been trading since then. Before that, I traded like US equity indices and some commodities futures. Yeah.
Well, this is going to be a great episode because I'm going to pick your brain on everything trading related. So, the first question that I would I actually want to ask all of the speakers, and perhaps we should start with Andre and then slowly move to Raymond and Penn. So, Andre, I would like to ask, I'm sure our listeners will be very curious to know, you as a trader, a full-time trader, could you share with us what's your average annual return that you've made from trading crypto alone? Could you share that number with us? Andre, maybe unmute your phone.
Yep.
Yeah. Thank you.
I got it. Well, for my average return, if I take on profits now, like cleared out my Bitcoin, I think I'll be sitting almost near like 90,000. I usually make most of my gains from staking crypto, or if I'm trading with my robots, those are all converting to forex gains. So I do trade a lot of crypto, but they usually translate to being dragged right back into staking. So maybe overall, maybe like 30 to 50 a year, just from staking plus gains.
Oh, wow. So what is your starting point though? And also could you share the percentage to us as well? I'm sure us would love to learn about that.
When it comes to percentages, I give people the biggest number. I give my averages. So I've run about 60 robots that trades all markets from different altcoins to main coins. And they average about maybe 11% per year because some robots lose, some robots win, but they average out pretty good per year. The starting amount when I first got into investing was about 80, maybe 85,000. But since I've grown into such a large amount, I'm sitting about now like 400,000 for my entire trading account for my main robots. For my personal account, not my managed accounts.
Oh, wow. That is a very juicy number indeed. And 11%, I'm sure a lot of us would find it really eager to learn. And also moving on to Raymond, could you share your average annual return to our listeners, just from trading crypto alone?
So basically, I have primarily two strategies. So one is the delta neutral strategy. So delta neutral strategy is more on the principal protected. You just need to hedge the downside risk, hedge the volatility. So this part of the delta neutral strategy roughly generates 40 to 50% annually. So the main trading pairs are just doing a lot of LPs and with hedge on Uniswap or probably do something else. Previously, I did GLP as well. So these are the delta neutral strategy. And the other one, which I'm actually more focused on now, which is the main strategy of my fund, is the alpha strategy. So try to find the outsized alpha in the cycle. Basically, to buy tokens that are undervalued, the valuation depressed, probably event driven. So then sell in in better market condition, or maybe sell in the bull market. So this strategy generate for the last 12 months it generated 127%. Actually, I'm looking at the chart right now. So it's 127% of the last 12 months. But I guess the market was good for the last 12 months, so then I was a bit lucky. But on average, I think for alpha strategy, it generates roughly maybe one time in bear market, maybe 2 to 3 times in the bull market. Yeah.
Oh, wow. alpha strategy to buy undervalued tokens. That sounds like a dream in crypto. And I've got like a lot more questions to ask you regarding alpha. But right now we have to move on to Pen. And could you share the number with us? What's your average annual return from trading crypto alone?
I mean, to be honest, I stopped tracking the annual return because I lost a lot of money to Luna and FTX, and maybe we can talk about lessons learned later on. So I pretty much gave back all my crypto returns from 2021, 2022. I gave it all back to Dogecoin and SBF. Yeah. So right now I'm just trying to start back from scratch and make it back what I lost.
That's okay. I think we're all going to make it, right? I mean, this bear market has been historically the longest in the Bitcoin history, but I think we're seeing some light at the end of the tunnel. So, well, that's okay. So moving on to the next question that I would like to, let's start with Andre again. So, because crypto is so known for the extreme volatility. So I wonder, what is your risk management strategy be like in order to stay in this game for the long haul?
All right, so some strategies that I implement is so let's go. I'll do some known stuff before I get into like the details. So a very easy strategy that I employ is a martingale strategy. So I'll have one on the bear side and one on the bull side. So just say I'm trading Bitcoin, and Bitcoin's basically been tanking since it hit 60,000. All my robots will be shifting from shorting. I'm sorry, from buying to shorting. So they'll be like, okay, on the weekly's been down for 3 weeks since that high. Then all my robots will engage into shorting basically all crypto, since Bitcoin's the leader, and typically where Bitcoin goes, most cryptocurrencies like the top 100 go. And that's where I mainly focus in, the top 100, maybe some coins that are lesser known, but just on that. Once my robots get that direction, they all basically stack their entries and just double up as they go. And they hold those positions until the weekly crossover. So right now, a lot of my robots are still short on Bitcoin, even if Bitcoin is hitting 30,000. But I'm currently buying at the 20,000, 25,000 when it comes to Bitcoin. So I have to hedge myself and place myself in different aspects of the markets depending on the time period.
Got it. And this sounds like quite similar to what Raymond's doing, right? The delta neutral approach that you just mentioned. Do you think you could share with us a little bit more, Raymond? Like, what's your risk management strategy be like?
Yeah, so delta neutral strategy is similar to what Andre mentioned earlier, right? So basically you have long position and short position. At any given time, you adjust your hedge to make sure that you are properly hedged, so you are kind of delta neutral. So if the market move up and down, it doesn't really affect your underlying asset price. So that's the beauty of the delta neutral. But the other part about alpha strategy, which is actually more volatile. So I think that strategy probably fit into your question better, because it could be just up down like 50% in a day, right? So for this particular strategy, I think the way I do risk management is number one, try to buy these tokens in the bear market. I think bear market is the best protection. Literally, I think just buying everything in bear market is the best risk management. So it protects your assets from the market overhand and everything. It's just much better way to protect your asset, because when Bitcoin dropped to maybe let's say 20,000, right? So it's very difficult for this to drop to 10,000, right? Maybe it could, but it's very difficult. But when the price was like 60,000, it's very easy to drop another 30%, right? So it's just buying in the bear market is the best risk management. Okay, number one. Number two, I think for crypto, the volatility come from a lot of different things. It could be from regulation, it could be from the protocol, it could be from hacking, it could be from many different things. So I think diversification is actually a key. For example, I invest in perp token a lot, right? Or different perpetual protocols. So some of them may have problem here and there. My way to do risk management is to try to diversify. Maybe I will pick one winner with a heavier weight or with higher conviction, but I also buy some number two and number three to kind of diversify the risk. So I think diversification is another key method to manage the risk. And also there are other ways. For example, you can probably do a more contract audit, and try to find maybe like OTC deals, and do other things to offset the risk. But I think in general, I think buying the bear market and diversification are the two key ways I manage risk.
Great, but I kind of want to go back to diversification that you just mentioned. Like, what do you mean, like diverse into different sector? Like, do you mean like, because there are like so many sectors in crypto? Do you mean you sometimes will buy some DeFi tokens, sometimes you buy like CeFi tokens? Like, how diverse are you, or it's just like still within the crypto basket, and or maybe you diverse into other markets too?
So I'm only talking about diversification within crypto, but outside of crypto, I also have, for example, I have real estate, I have US equities here and there, right? But that's not really crypto. That's not what we're talking about here. But I'm talking about diversification within crypto. So, for example, I have some tokens in DEX, in perp DEX. It could be in LSD, stable coins, RWA, or GameFi, SocialFi, NFTFi, maybe some other things. So it's basically a diversification within the crypto space. So that, for example, if DeFi is doing well, then I benefit from DeFi. But if SocialFi is doing well, I benefit from SocialFi. But they can't possibly just tank at the same time unless the market tank, right? So that's what I mean by diversification. So I'm not subject to the single protocol risk. For example, if there's one protocol get hacked or rugged, I'm not exposing myself 100% to that protocol. I'm probably exposing myself maybe 5% to 10% to that protocol. So the risk is more manageable.
Got it. So you mentioned there are so many sectors like LSD, LWA. Like, I wonder which sector accomplished the highest, like in your portfolio then?
Interesting. Well, it depends on the timing, though. Interesting. I think maybe over the last 12 months, right? Maybe some are DeFi tokens. Some early DeFi tokens that actually generate a lot of return for me. So, for example, I made a lot of money on Camelot and the Velodrome. So Camelot is the native DEX on Arbitrum, and the Velodrome is the native DEX on Optimism. So these two are actually brought me a lot of money over the last 12 months because they were actually I bought them quite cheap. In the very early days, and I still hold them. So these are the two I can think of right now. Some perp DEX, GMX, and all that. I made some money here and there too. So I do a lot of DeFi stuff and some new tokens. But I think it's hard to say. Well, some make money here, some make money there, and at different timing they may have different performance. So it all varies.
Got it. Well, I totally agree with you because I do hold different sectors in different. I do hold different tokens in different sectors, and in layer 2, I'm quite bullish as well. So I would like to throw the same question at Pen, like, what is your risk management strategy be like, and especially like crypto is being so volatile. So I wonder what are you doing currently?
Yeah, so I think the way I think about risk management is that there are different layers to risk management. So because I'm not running a fund, it's basically all like personal money. So I think risk management has to start all the way at the top, right, at the portfolio management level. So just now, I think Gentleman Zhao talked about diversification. So you have to, your personal funds, you have to diversify across different asset classes. And you have to know like what's your overall financial goal is, and then you can structure your portfolio accordingly. So, I'm a pretty young person, so I can afford to take risk. And crypto, which is, I think, the most far out of the risk curve asset class, it's the most risky. So you have to allocate accordingly. Maybe it's like 10 to 20%, but maybe for more degen people, it's like 50%. So it depends on your personal risk appetite. And actually, in fact, crypto trading or crypto investing is very much like angel investing or liquid venture, as Richard mentioned. A lot of these projects, some of them with tokens, they don't even have a product. So you are literally trading like shitcoins and magic internet money. So you just have to be aware that a lot of tokens, they have legit projects with legit products, but a lot of these projects with tokens have no product. So you have to be aware of what you are playing with, and you have to distinguish what is trading and what is investing. So for me, myself, because of the liquid nature of a lot of this asset class, when I say I do swing trading, but when I say swing trading, I also mean like swing investing. So what I mean by that is a lot of my decisions is driven by fundamentals. So for example, if let's say you go to a DAO forum of let's say Lido, right, and maybe there's some alpha there with regards to some like protocol changes, and that might positively affect Lido as an example, and you can buy into that because that the event hasn't been priced in. So for me, that's a swing trade. Like the trade will probably take place over a few months, and you buy into the token before the event happens, and after the event happens, you just slowly unload. So that's example of what I do with regards to trading or investing. It depends on how you look at it. Yeah.
Yeah, there's definitely a lot of speculation involved, especially in crypto. But
yeah,
okay, that's what makes it so fun, right?
Yeah. I mean, my personally, right, I don't believe in long-term investment in crypto tokens, simply because a lot of these are super early stage, and if you can make a quick buck and the project is very suspicious, you you just take what you can. Yeah.
Yeah, it's great.
I honestly think, right, there's less than 100 legit projects in crypto right now, and if you really want to do proper long-term investing, there are not a lot of names you can put your money in. But of course, if you just want to trade, you can trade anything. Yeah.
Yeah, I mean, there's a lot of like projects are promising the world, but at the end of the day, they are just like, I'm so sorry to say, but they are very scammy. Well, moving on to the next question that I would like to throw at Andre. So I wonder, like, what sort of factors you would consider before making a trade? Do you just do like TA, looking at the charts, or any like on-chain analysis? Like, what do you do?
So for me to approach a market to say, we'd look at XYZ coin, doesn't matter.
This space was downloaded via spacesdown.com. Visit to download your spaces today.
First thing what I always do is throw that chart onto my robotics. They go through and analyze which one is the best entry, where is it currently priced at. But for like a manual position, it would be this. If you look at the year to date, 1 year back, are you under the top high? Are you below the top high? Where are you priced at? Now, when it comes to other markets, like I'll look at the biggest factor in looking at other markets is looking at what the government's doing, because the government drives the entire market in certain aspects. When it comes to crypto, I like to see who are the bigger players getting in and where they're placed. It's kind of like following where the elephant is. So retail traders, when they jump into the pool to make a small splash, when an elephant or a bank, big buyer, where they make their splash, that's where I typically try to find if I'm manually trading. So look to see when a elephant or a large person or large entity enters. The easy way to find that is consolidation points in large candles. So when I'm looking through the charts, I'm looking for large bodies, large areas of candles where someone who had a lot of money made a big splash. Because that's typically where the market has to go, because they need to cover their positions. And they need to fill in liquidity gaps and stuff like that. But once I start figuring out where that direction is going, then I'll start breaking down the technical analysis, like, hey, they broke this area of support, this area of resistance, or they filled in this gap. And I think when it comes to technical analysis, gaps are one of the best indicators of where a market is going to be filled or where it's going to be going. And once I get those basic criteria knocked out, I typically will stagger my buys. So I'll be like, okay, if the current market, let's say the market is at $50, or let's say it's at 50 cents or whatever, and the high is at $10, is double up, then I'll be like this, okay, at current market value, I'll put in $10. At 20% lower or 10% lower, I'll start adding buy limits, and I'll start adding more weight to my buy limits. And then if the market doesn't hit those buy limits, I'll start doing the same analysis with buy stops. If I perceive the market to go up, and it'd be inverse if I think it's going to go short, I'll just start putting sell stops or sell limits or current market sells to target my entries to basically stair step it. That's like the basic way I would break down if I'm entering any type of crypto.
Oh wow, that sounds very well. It sounds very technical, and I wonder how much is the robot is doing, and how much are you like manually like trading on all these like news or TA?
So all my robots, I'll say nearly 99% of them all contract news, high volatility, what's happening on different platforms. If there's a whale that's going to be entering, or a giant elephant is going to be entering, or a big bank entering, I mark, I think, like 14 websites that are like the top cryptocurrency websites, kind of like CoinMarketCap. So if there's like a big news come up, all my robots will have like a freeze part. So this is something I tell like many traders. So I call it the confirmation basic checklist. So if you're going to enter in a trade, you need to have like a checklist, like a no BS checklist. Like, hey, if I want to enter in Bitcoin, it has to hit this price point. I'm going to add at this amount, and I'll have a stop loss here. And if the price moves up to X, I want to move my stop loss, lock in those profits, and basically stair step my stop loss to maintain higher profits, just in case that Bitcoin gets volatile and knocks me out of my trade. Have that checklist put in place so you can always manage your trade. So if there's volatility, if there's craziness happening in the markets, my robots will catch, I would say 99% of it. I only look at my robots maybe once every few days. And they'll send me basically like a text message saying, hey, Andre, literally my robot will say, hey, Andre, there's something wrong with the markets, check this robot. But if I'm checking it manually, like most traders out there, I would check it like on a daily basis to see what's happening, move my stop loss accordingly, or move my target profit.
Well, I can definitely see the benefits of using a robot, and especially because robot has no emotion, and sometimes us human will get carried away and we don't stick to our original strategy. And another really good point that Andre mentioned is that we have ease of mind. Like we don't have to like constantly be checking on the price, etc. I would love to get into robot trading with you one day. I mean, I've got so much to learn to you. But right now we have to get to the next guest, who is Raymond. So I'd like to ask you, what about you? Like, what sort of factors you consider before making a trade?
Yeah. So I think, maybe, just to clarify, I think a lot of my investments are actually more like long-term investments rather than short-term trade. So of course, I adjust my positions from time to time. So yes, I do trade quite frequently, but when I do these trades, it's actually consistent with my long-term view on certain things. For example, I actually 100% agree with what Pam mentioned earlier. Lido, for example, is a very good case. It's a real business. It has very sustainable revenue. It has a very strong use case. Of course, it has its own challenges and all that, right? But it's a real company. It's a real business, and that not that many real company and real business in crypto that generate real revenue or real yield, right? So a lot of these crypto projects are very scammy. So for the factors I'm actually looking for when I make investment decision, the business sustainability, scalability, real use case, and real revenue, could be on-chain revenue, on-chain data. I can track how the companies perform financially. So these are the key things I will look into when I make these investment decisions. So again, crypto is, of course, we look at charts and all that, right, to understand all these different trading patterns, the price movements and all that. But at the end of the day, for me personally, I prefer to trade something I have convictions, and at least I have some convictions in, and I hope these products will do well in the future or long term, and that's the kind of precondition for me to even hold them in the short term. Yeah.
Got it. I love your answer. And I wonder if Pan have anything to add to this. Like, what factors would you consider before hitting that buy button?
Yeah, I mean, for me, I very much believe that fundamentals drive prices. So I normally would start doing research, mainly by you of course you do your basic research, like you read the blog posts and all that, but also you need to hang out in the governance forums, because that's where a lot of like before the engineers of a certain project put in place certain implementations, most of the time it will go through the governance forum, and there's a lot of alpha there that hasn't been played out, that hasn't been priced in by the market. So that's mainly how I do it. And I think also when you want to do trading as compared to investing, you have to look at order flow, because I think was it Andre who mentioned you want to follow where the whale is going, and on-chain order flow really helps. Like if you use Nansen to track what the whales are doing, most of the time the whales order flow is because they spot a fundamental opportunity, because most of the whales, because of the size of their capital, they can't afford to do like short-term trading because of their huge like capacity. They would move the market. So because of that, most of the whales they are actually pretty fundamental. And I think honestly, I don't believe that much in technical analysis. I think people should look more closely at like on-chain order flow or like footprint charts as compared to purely candlestick charts. Yeah. And yeah, I think that's my take.
Yeah, I see what you mean. Like, you can't just use like just looking at the charts, and because I personally I don't solely believe in TA neither. Perhaps Andre, you could jump in if you want to clear us out. But like, I do believe that TA only works if you incorporate with other analysis too, like on-chain or news and fundamental. Well, this is just my personal belief. Well, moving on to the next question, I wonder what is like your portfolio look like? Like, I'm going to ask all the guest speakers today. Maybe we should start with Andre as well, because I know you are quite exposed to international markets. So, like, I wonder, what is the pie looking like? Like, how much do you allocate to international trading, or like stocks or bonds, real estate? Like, how exposed to crypto are you?
All right. So when it comes to my entire portfolio, like my exposure, I would think about maybe with Bitcoin going up about 15, 16% now when it comes to cryptocurrency. That's including robots, trading robots, staking, and also my own positions that I put in there manually. My biggest portfolio is precious metals. So when it comes to like cryptocurrency and precious metals, the reason why I like those the most in my portfolio is because they're honest and it gets out of the government's hands. And as the government, basically how we're in this environment today, where we're basically, this is one of the primary reasons why I'm in crypto, because we're in such dangerous markets, is that cryptocurrency can protect you from a whole bunch of things like them blocking or banks shuts down. Also, crypto can help protect you if like FTX things happen. So in my opinion, why I keep it like 15, 16% is because it protects me, and also precious metals does. That's like the biggest part of my portfolio.
Great. What about Raymond? What is your portfolio looking like?
Well, I have quite some investments in different things. So I guess U.S. equity is actually a big part of it. U.S. equity is actually a big part of it, and while crypto is another big part of it. Of course, real estate. Real estate is another part. So I think I'm actually quite diversified in terms of the asset classes and also the way they perform, and correlate with each other. So I think yes. So crypto roughly is 30% of the entire portfolio right now, and then within that 30%, roughly half of that actually went to Bitcoin and ETH, and the other half actually went to the altcoins. So that's roughly the breakdown.
All right, that's good to know. So, what about Pen? What's your portfolio looking like?
I think crypto is like 10-20% of my entire portfolio. Before all the shit show, I think it was probably like 80-90%. And it was a very hard lesson to learn. So I think my lesson is do not over allocate to crypto, even though you are very bullish on the tech.
Yeah, diversification is always the key to stay in this game for the long haul. Well, moving on
Actually,
to the next.
Can I just add on that point? Because I agree with Pan on that point very well. But it's just what I learned from FTX, and of course everyone got hurt from FTX last year, right? So what I learned from FTX is that I think the mutual focus is really on diversification of custodians and exchanges that we actually work with, instead of running away from crypto, because crypto fundamentally the self custody and all these technology attributes, right, are actually very very beautiful and elegant in the way in our world today, because we are working into a world that is more chaotic than before, and we are more likely to have wars between countries than before. We're more likely to have sanctions from other countries than before. So self-custody, a lot of things are actually a super sovereign currency are extremely important. So I'm actually working towards crypto more after FTX, and instead of less. Yeah.
Well, that's a very interesting approach. Moving on to the next topic, because I do want to get into the crypto regulation a little bit. Because Andre, you do so many like international trading, and because I believe you told me that you buy companies from like different countries, right? And that was very eye opening. And so I wonder if you could like talk about the legal aspect of like trading in like so many different jurisdictions. Like, how do you navigate it?
So the best thing about to international investing is that you get away from the government's craziness. So a good example would be this: if you're an American and you get with American brokers, you can't do leverage trading with with American brokers for forex pairs or cryptocurrency pairs. You're rather limited on what you can do. You can't do like EA trading or robot trading on gold and silver. There's huge regulations. So when it comes to the international plan, and especially when it comes to crypto, you're able to move assets, move money basically around without any issues. So when it comes to the legal part around there, one of the biggest issues you're going to have to get is a secondary ID. So you need an ID. If you're American, you need an ID that's in a different country. So once you get an ID out of a different country, you're going to have to fly to a lot of these places. So I've been to about 40 countries so far. And for me, I would fly to a country. I'll have a friend, I'll hang out there, and then I'll open up bank accounts and then open up brokerage accounts while I'm there, or do it, through the mail like I did through Hong Kong. And I'll just keep opening up accounts so I can keep cycling money around and buy assets that are in foreign currencies. Because right now, for example, like Bitcoin's up. If you compare Bitcoin to some of the crappier coins, if Bitcoin's up, exchanging that to buy a cheaper coin is basically you're betting on it long term. So that's what I do with the dollar. The dollar is really high right now, so I go to these cheap countries, send dollars there, and some of the legal aspects of it, you have to do like a bunch of terrorist forms and stuff. But each country does the exact same thing. So when I send money to Belize, or I send money to Hong Kong, each country asks, like, what are you doing? Why are you sending money to here and there? Why are you trying to get exposure there? It also gives you protection. So if you're getting into cryptocurrency or international investments, it protects you from your host country. Because your host country, kind of like during the scandemic, plandemic, they'll lock you down. You can't go to work. You can't provide for your family. If you have international banks, international investments, they can't stop you from spending your money. So that's another reason why I love crypto. So during that period of COVID, I had a lot of crypto and it was staking and I was doing pretty good. I can spend my crypto without the banks telling me I could not or have some issues with that. Another big thing about when it comes to international investing, if you have a secondary ID, and that ID is so important when you're going overseas, is that the reporting requirements change to self reporting versus them reporting on you. So if you're an American citizen and you open up a bank account in Hong Kong or China, they are required by the IRS, are required to report to the IRS. But if you do it manually and you open up accounts, you can remove that aspect of you them reporting on you, and just do it backwards. So what else? Another good thing about it, if you get into international investing, getting dividends or passive cash flow overseas, so while your currency is basically strong, your host currency, or if your currency is weak, getting to other countries, basically you start diversifying your portfolio. So when it comes to international investing, to me, it's about 40% of my pie, because that's how much I keep shoving over there just to protect myself when the dollar dies. So my Bitcoin would do good, my cryptocurrency would do good, my precious metals would do good, all hedge on one country failing.
Oh, wow. So, because Andre and I did an interview like a week ago, and I believe that interview is rolling out on Andre's YouTube channel very soon. So stay tuned for that. Because when I talked to Andre for the first time and he told me about international trading, I didn't know you could do such thing, and it's very insightful for sure. But if I want to get into that, maybe I need to get a second ID. But yeah, let me look into that. Well, so Raymond, I would like to ask you the same question too. Like for crypto regulations, like it varies from country to country. How do you navigate the legal aspect of trading then? Raymond?
Legal aspect, I think there are two things, right? So basically, how do I get money into the system on ramp and off ramp, right? So this part is, I think it is reasonably easy now because we have Kraken, Coinbase, and we have some other exchanges that do this on ramp off ramp thing with the US related banks. So that part of the money transfer is quite easy. I think that's one part. So it's not really a regulatory hurdle now. And two, I trade mostly on DeFi exchanges. I trade mostly on decentralized exchange like Uniswap. So it's not really a regulatory concern for me. As long as the code, Uniswap code is there, it's up running on its front end, then I'm all good, right? So I don't really care about that part. So I don't think anyone can prevent me from trading on Uniswap. But to add on this point, I think the regulatory clarity is increasing for all different countries, especially for Hong Kong and US. And we are seeing that the Hong Kong government is extremely and friendly with crypto investments, crypto exchanges, and all the different things. Hashkey just opened their retail exchange on November the 1st, and they also had a fintech rate announcement here and there. So it was actually very, very positive in Hong Kong. And in the US, we are looking at the ETF approval, and maybe that will happen in January. So that's actually another huge regulatory endorsement of crypto as an asset class. So I think this regulatory, I guess, uncertainty in the past is now gradually fading away. So we're looking at a more, I guess, a better and more regulated environment going forward. So so more people will be receptive to crypto. More people will be joining us. So and this Twitter space has like a few hundred people right now. But going forward, we may be looking at a few 100,000 people joining this Twitter space to discuss crypto, because this regulation definitely will help more people to get on board with crypto. Yeah.
Right, thanks for your answer. But right now, I'd like to shift gears a little bit because we mentioned risk management in trading crypto. We mentioned diversification, and we just mentioned regulation. So I'd like to ask Pen, like, I wonder, like, if you have any advice to offer to newcomers, new crypto traders or investors, like something you have done in the past and you just wish you knew, or someone would just tell you.
Oh, so many, right? I think, first of all, my biggest lesson from past 2 years is do not believe the hype too much. What I mean by that is during the bull market, you have people like Suzu, and he was hyping the super cycle theory. You have a lot of like all these quote unquote mental models like ultrasound money, hard money, digital gold. I would advise people to be more skeptical of such quote unquote mental models, or like and just really question if all these claims really make sense. For example, the super cycle theory, I think a lot of people got caught up in. But if you really think about it, maybe it does not make that much sense, especially after what we've learned from the FTX saga. I think last year's bull market is basically Alameda taking FTX's customers' funds and just max long all the Bitcoin, ETH, and all the altcoins. That was what caused the run up to 69K. It was not an organic super cycle, like, for example, the commodity super cycle in the last decade. That was organic because there was organic demand from China and all that. So I think when you are trading or investing, you can take advantage of these fake mental models, but just do not believe it too much. Yeah, I think the second lesson for me is do not have too much faith or trust in people that you've never met in real life. Do not trust people too much whom you just know on Twitter. Yeah, I think a lot of the Twitter game, and it's all PR. And if you've read some of the things that came out from Suzu and all that, you know that they use social media to craft a certain image, to get retail traders to believe in what they say, and eventually the whole goal is you are their exit liquidity. So yeah, just be more skeptical of both people and the concepts and ideas that these people share on social media. And at the end of the day, always do your own research. And what that means is, really like primary research, not secondary research, which you read. Like people love to read Twitter threads and all that. That's not research. Research is going to the GitHub. Research is going into governance forums and finding out what is actually happening on the ground, and not reading secondhand accounts. Yeah. Thank you.
Yeah, I'm completely with you. And especially in crypto, you should always have a skeptical mind, and it definitely goes a long way. Well, to shift gear a little bit, because when it comes to trading, there's often prediction involved. So I wonder, Andre, what's your prediction for 2024 in the crypto market?
Ooh, I love this question. Okay, so what I think when it comes to crypto next year is one of two things. Is I like to look at the what's happening politically. So a good example would be this. Before Bitcoin ran up to 60K and cryptos all exploded, basically the United States government was giving out free money. It's just like candy, Halloween, here you go, here you go, here you go. So if next year, which I will think, even if Bitcoin's halving, I think the main thing next year, if there's any stimulus checks or free candy money, that's going to be one of the biggest drivers to pump up crypto, even more than it's going to go up next year. Another factor of why, and that's why I look at what's happening with the economy first, what's happening with the government, because that's basically just big elephants, big banks driving the markets. They got so much extra cash, they just basically print away. So once I can see what's happening with that, Bitcoin, I think cryptocurrency, all that, I think the top 100s typically should be going up next year. Now, I don't know how much. Like I pray for 100,000 Bitcoin, because I'm so fixed in at 20K. So if it hits 100,000, woo, hand clap, But the main thing is that if we can see more government manipulation, I think the prices should go even more astronomically higher. So pray for basically a horrible government for all crypto to go up.
I'm sure a lot of listeners are also praying for 100,000 Bitcoin, because we didn't get that in the previous bull market. So hopefully this time we'll get it.
Can I say something? Sorry to be a wet blanket, but I don't think Bitcoin will reach 100K anytime soon.
Oh, actually, I got a question about that. So hypothetically, right, just say, I don't care who the president is. I'm not left or right. It doesn't mean anything to me. If whatever president says, hey, we're going to do some stimulus checks and give out, let's say 400 billion or 500 billion or even $1 trillion, because I mean, we're giving that out to the wars anyways. But let's say, hey, we're going to start getting out to wars and give them people their money back. Do you think a big portion will be thrown into crypto?
I think in traditional institutions will allocate more to crypto, but not to a level where Bitcoin will reach 100K.
What level do you think is appropriate, if you don't mind?
Honestly, I don't know. Even if you look at the previous cycle, the Bitcoin's all-time high is about 69K. And I believe the majority of that movement was because of FTX and 3AC. They max longed, they took billions and billions of their customers' funds and funds that they borrowed from other people, and they just went all out on Bitcoin. And that was why it reached 69K. So I believe that unless there is another SBF or Suzu in the making, Bitcoin will not reach 100K in the next cycle. In the next year or so.
Yeah, I would say it would require a higher level entity like governments or banks or institutions to throw out that leverage to pump up the markets even more, causing a whole bunch of danger. Because to me, I would say FTX's whole collapse was staged. That when you give someone that much leverage, that much power to basically get all that currency to manipulate it, it's going to end up bad. And that's what I was saying. I don't know if Bitcoin will hit 100,000, but I think the rally up for all crypto, and especially I don't think stocks do so good unless the Fed kicks in. But that's why I look at it from where is the government's basically going to be shoving their currency into what sector, because it's going to drive it higher or lower, or just depending where they're going to put it at. But that's my thoughts on crypto for next year.
Yeah, this is a great discussion. And I also wonder what Raymond thinks. Do you think we'll get
a lot to add,
100K?
actually. 100%. I would definitely get 100%. 100% would definitely get to 100K. So, okay, last cycle we were looking at 65, 70K, right? So this cycle definitely is 100K. So, so a few things, right? Number one, we are looking at a 35K BTC when the interest rate is at 22 years high. Okay, so 5.5% interest rate is not sustainable, is unprecedented, is just crazy. We don't see this rate. Last time we see this rate was 2000, and then before that was 70s. So it's unprecedented. It's very, very difficult to see this rate hike. Okay, so and we can maintain this price at this level. That shows a lot of confidence within the crypto space and from the outside. But two, we are looking at the ETF of Global in January. So let me just give you some numbers, right? So previously, Grayscale GBTC, the GBTC whole thing was actually 20 billion. Okay, the GBTC thing was actually 20 billion. So so that was a 20 billion basically capital inflow that drive up a big part of the BTC price increase in the last cycle. That was the 20 billion capital inflow into GBTC. As we all know, that was the big institutional buyer. Okay, so this time, BlackRock, Vanguard, all these bigger ETF players are coming in. What's behind BlackRock? It's not really a fund manager that wants to buy BTC in the BlackRock office. It's the ETF. What does the ETF mean? ETF is a financial instrument available in the US for US average people to have access to. For example, their 401k, their pension plan. So first time in history, they can actually allocate something to crypto in their 401k tax efficient pension plan. And we all know that BlackRock and the Vanguard and all these asset managers have trillions of assets at disposal, right? So imagine if 20 billion can create the hype of BTC last year. What can BlackRock and ETF and Vanguard, all these people do in the next cycle? The 100K is no question. Okay. But however, I think my view or my prediction is somehow between the two gaps we have here. So I think we definitely will get to 100K in the cycle, but I just don't know when and where. And then the question is, how do I see ourselves in the short term? I also pinged a Twitter a post I posted a while ago. I'm actually quite pessimistic on the short term because in the short term we have very severe QT as a quantitative tightening. So in contrary to what Andre mentioned earlier about helicopter money and liquidity pumping, we don't have the liquidity, we don't have the QE, we don't have the easing. Instead, we have the tightening, and this tightening is unprecedented. We are looking at 100 billion. We're looking at 100 billion assets out of the Federal Reserve system, out of the so Federal Reserve is like withdrawing is the balance sheet from the market, 100 billion a month at its pace. And Federal Reserve is the last lender. So if we time maybe the multiplier of 5 to 10, we're looking at half to 1 trillion money going away from the market, from the risky assets. So that's why I'm actually short-term very cautious. In terms of, I'm actually very short-term cautious because of liquidity things is not going anywhere better. Maybe for another quarter or two. But long-term, let's look at maybe 1 to 2 years framework. I'm definitely super bullish. I think my view is probably between the two gaps here.
Do you mind if I ask him a question?
Yeah.
So basically, we're pretty much agreeing that the Fed controls a lot of the markets, right? Do you think that interest rates will be decreasing very soon, or will they steadily increase? What are your thoughts on interest rates, let's say, for the next year or so?
I think the interest rates will not go higher. I think we are pretty much at the max of it, but it's going to be very sustainable. So the high interest, because the U.S. economy is actually doing quite well now, it's not breaking yet, right? So the interest rate maybe keep at this level for another 12 months, which is not very good for the risk assets like equities, crypto, or whatever, right? It's not very good. So and the U.S. will not decrease the rate until the unemployment go up or the something break in the system. For example, the Silicon Valley Bank was a good signal, right? But that was just a one-time thing. If we are seeing like more banks fall apart, then we will see rate cuts very soon. But it's very data dependent. But as of now, where I can see today, we probably will not see rate cut until end of next year.
I like that analysis because when I talked about like interest rates, I know how the federal government is. They're very corrupt individuals. They're only looking out for themselves, not for the commoners or the regular people. So I tell people this: if they're honest, they'll increase rates. But we know that they're dishonest. They're going to decrease rates and turn on the faucet when it comes to currency and just print away. So be aware of that, guys. So if you're looking at equities or markets, just know that once America, because America basically funds most of the transactions in the world, the dollar, once the interest rates go back to zero, that's what the most likely thing will happen. Then you'll see markets get chaotic again.
Yeah, well, I can't say much about interest rate, but like so far, I'm definitely leaning more towards believing Bitcoin will reach 100K for sure. Because with like the whole ETF being approved, like for sure, BlackRock's gonna get approved, and with Bitcoin halving and the adoption in Asia is growing so rapidly, it's very hard to be not bullish for the next cycle. I don't know when the next cycle, like exactly when it will be, but I know that it's gonna be a crazy one. Well, but unfortunately, we are running out of time. But before we end this, I also know that Raymond has something to share because he has some upcoming Twitter series. Do you mind telling us more details about it?
Yeah, sure, definitely. Thank you. So yes, I'm actually organizing a series of the Twitter space with MarginX. So the Twitter space will mainly focus on perpetual DEX in the DeFi space. As we all know, like perpetual DEX is actually a very complicated but super profitable sector within the crypto space. It's definitely something that has real yield, real use case, a global use case actually. So this is a sector that everyone should just focus on for the next bull cycle. So if we believe that some tokens can potentially outperform BTC and ETH in the next 4 years. I think definitely some of the perp decks will be among the winners. So we will have a series of Twitter space on this topic, and I will definitely share a lot of our ideas. We invite perp decks founders, builders, KOLs, as well as perp decks focused investors to join the space and share a lot of ideas. Yeah.
Great. I'm looking forward to your Twitter Space series. And also make sure to follow all of our speakers on Twitter and also make sure to follow MarginX. MarginX is also announcing community partner for the upcoming Taipei Blockchain Week 2023. As part of this collaboration, you can also use a discount code of MarginX50 with all capital letters to get yourself a 50% off the pass. So do enjoy the discount if you decide to go, and we'll be hosting him regularly. So stay tuned to know when our next Twitter space will be. I hope to see you guys again, and thank you so much for your time. We'll talk soon.
Thank you, Jam. Thank you. Thank you, everyone.
Thanks, everyone.
Thank you.
Bye.
This space was downloaded via spacesdown.com. Visit to download your spaces today.